I started Thorney as an investment company approximately 20-odd years ago, and with a small capital base, literally of $1 million that we started with. Thorney's grown to over $1 billion today. We're most particularly known, I think, to the investment community through our activities in the small to mid-cap listed sector, but we do have a property arm. We do have a private equity business that we're pretty active in, and we're also active internationally in the US and in Israel in particular in relation to technology, which I'll come to in a minute. Over the years, we've been what is commonly known as an activist now, as if it's a new style of investing, but we've been that way all the way through, and I like to call it a constructive change catalyst is what we've been. So when we see an opportunity to pressure management, encourage management, change management, the board, we tend to get close to them and we'll discuss what we think is the opportunity to create better value, and we will encourage an outcome along those lines, and if we have to push and shove a little bit, we will, and that's been a successful journey for us in realizing maximum value on some of our investments that way, ultimately through a lot of M&A activity. We have been an investor across the broad spectrum of the industry, manufacturing, industrial, resources, mining services, property, and of course technology. We've been active in technology for quite a number of years, and hence this opportunity that I'll talk about now. But I have run a private business up until a couple of years ago when we did our first LIC, which is called Thorney Opportunities. TOP is the symbol. And the genesis of that was also a backdoor listing. The idea was to take advantage of both a value and an activist situation. We started with a relatively small pool. In the 3 years approximately, we're up about 20% per annum, NTA, after fees, for the approximately 3 years that we've been in existence. And we have been, as I said, pretty activist within those companies. Some of the main investments in those companies you might be familiar with. ServiceStream is one of them. AMA, Diversa, which had a takeover bid from OneView earlier this year. We've recently taken a position in Fairfax there, and a number of other companies. iSelect is another one. And we have been pretty dynamically and robustly involved with some of the changes. If you follow any of those companies, you would have seen either they've sold divisions or assets, or there's been leadership change at the CEO level or at the chairman and board level to bring better performance in those companies, which has been reflected in their share price. And we have the capital to help those companies recapitalize, sort out their balance sheets if need, if we believe the underlying company has got value. On the journey in the last few years, as everyone knows here, technology companies are becoming a bigger part of the index, a bigger part of our pool of activity, disruption in so many fields, and we've been active in it, both in the listed sector and in the pre-IPO space, which is a growing demand for our capital because a lot of the companies are looking for us to not only put some money in, but to help them shape up and direct where and how the IPO path will continue. Included in that is companies now coming from offshore, recognizing the capital markets here. So companies from Israel and companies from the US. Recently we backed a company called Updata, which was a company whose business is entirely in the US, but they've just accessed the capital markets here through a pre-IPO, and through our network we were able to get the anchor position there and supported them into the IPO. Share price today, only 12 months later, is 3 times the pre-IPO price and more than double the IPO price. So we think there's a lot of demand for us to be involved in that earlier stage, and what they call Series A, B, or C, or 1, 2, 3 in the US, are going up the curve of the life cycle, is I think where we can also be active, and including some startups if we want to. And what we decided to do is come up with a vehicle that is unique in the Australian market, which is a listed investment company with a daily share price, obviously, but can give you So it gives you liquidity into a range of the spectrum up the life cycle of a technology company. So we can be active in mature listed companies, immature listed companies, pre-IPO, and as I said, earlier stage. Now, as you know, if you want to invest in the non-listed sector, if you don't do it individually, you usually have to go in a fund. You may be locked up for 3, 4, 5 years, no liquidity at all, pretty poor grey market. So we've decided to come up with something that will give people an opportunity to potentially have in a high alpha situation with technology, managed with our risk management skills that from an experienced team, but still have daily liquidity to give the opportunity to come in and out as you please. So we've found a vehicle that we're repurposing. It has quite a bit of tax losses in the vehicle that hopefully we'll be able to utilise over time as well, and we're underway. As Sam said, we're looking for a minimum of 20. I think we're already there. And we can take as much as 125, but we're looking to keep it as a boutique vehicle. I personally will invest and have approximately 20% in the vehicle. Now, we're following the same path from our successful experience in our existing LIC. That is that I have a big stake in that, and we were active in the aftermarket. When there was a discount to the NTA, we went in there quite aggressively, and we were buying, and it was to our benefit. Ultimately, we got a lot of value from being in that space. From that experience, we've learned how to communicate, I think, much better with the market. Initially, I think, to be honest, we were a bit slow acting like a private company. I think we've learned now how to put our investment communication letters out there, a lot more transparency, give people visibility into the thesis behind what we're doing, and the proposition, so they can go along on the journey. And we've also decided to inject a few equity positions into the starting of this LIC so that people understand the flavour of some of the companies we're looking at, why we're looking at them, and also to give a starting portfolio to ensure that there's activity right from the get-go. Some of these companies, you'll see them on the board, you may be familiar with. Some have been listed for a while, like Adacel and Webjet. Others are relatively new, and a couple of pre-IPOs that you'll see at the bottom there, which should come to the market during 2017. So an example of our deep depth of history in the technology sector, Webjet, now which is approximately $1 billion company today. I was the first corporate investor in that company over a decade ago. The shares were 19 cents, I think, from memory. Today they're $10 approximately. We've gone through that journey. We understood the platform they were building. People were very skeptical on it, but we travelled and have a lot of experience through our connections overseas. We're able to check out the due diligence on their technology, their platform, their thesis, the management team, and we stayed on that journey to our benefit. Adacel is another one. It's a software developer. Ultimately, we stepped in and took a chairmanship role through one of our employees at Thorney, redirected that business in an activist way, basically closed down their Australian operation or shrunk it down to 6 people. They now have 200-odd people in the United States based out of Orlando, Florida, and Canada, where they do their research, and suddenly that company's transformed itself as a boutique player in the aerospace or air traffic control systems, and strong balance sheet, good cash, and earnings positive given distributions. NextDC, I think you guys know it well. You've been involved in it. We believe in that journey, and we're pretty active there. Hub24 is another one. We were activist. It was a brokerage firm and a funds under management platform, which we investigated and believe was the next best platform that was out there for managed investment portfolios. We encouraged the company to have a change of leadership, sell off the losing brokerage business at the time, focus on the platform, which was the future. At the time, the funds under management were about $50 million. The company announced a couple of days ago it's on the cusp of about $4 billion under management now, and that's only in a journey of 4 or 5 years. So that's the sort of an example of some of the type of things that we looked at. Updater was the one I just mentioned, which was the New York business that listed here. And again, just emphasizing that pre-IPO point, Updater said it's much easier for them to have a regime here as a public company than it is now to deal with the venture capital firms over in the US, and the same goes for Israel. Why? Because the legal demands and requirements and the imposition on their management style by the VC firms is very aggressive there. They have clawbacks and other things, so there's an attractiveness for them to be listed in Australia as small technology companies, and we think we can take advantage of that. We are already taking advantage of it, but once we have a dedicated pool to this, we think we'll get a lot more deal flow in this area. The fee structure for tech is very similar to the other listed investment company. It's 1.5 and 20. 1.5 is the hurdle rate. There's no high watermarks or anything along those lines. There's no options because we don't want to distort the NTA with the possibility of this being a high alpha performer. So we've just kept it very vanilla and very straightforward. And that's probably the quick summary of it. We'll be using the same management team, got back office systems, we've got protocols in place from the already existing vehicle. My private company will be able to be a co-investor here if we need the extra horsepower to be more influential on some of these pre-IPOs and other things, then we've got the capital to put behind it. We will have a portfolio mix that will be blended between the listed, the pre-IPO, and less of the earlier stage, but we will still have that one. And we'll take advantage of our network, as I said, internationally through Silicon Valley and in Israel to be able to have two flow traffic. One, source deals from over there that can be listed here ultimately, and more importantly even is we'll be having a deep due diligence capabilities through our network overseas that we'll be able to tap into. So we feel pretty confident. We feel it's a kind of a unique vehicle in Australia. We know, as you know, that technology is going to continue to be a vibrant and growing sector, and we think we're in a position to take advantage of that through this vehicle and with the support that we've got from our management team that's experienced. So